Hello and welcome to the CNBC-TV18's Mumbai newsroom. I'm Sonal Bhutra. With me is Pavitra Parekh. You're watching MF Corner. Well, today we'll discuss what is the correct time to start your SIPs. You know, that is the biggest question. Should it be at the top of the market? Should it be at the bottom? Ideally, people say it should be when you're at the bottom of the markets. But there is an interesting note by WhiteOak that talks about why investing at the bottom is not always the way to go about investing. We've seen SIPs at record high levels, so it's the apt time to discuss that.
All right, that has been the hot topic, right? And I think also the point is that sometimes in trying to wait for the perfect time, you might end up wasting a lot of time. But let's get in our guest on that note. We have Manuj Jain joining us. He's co-head of product and strategy at WhiteOak Capital AMC. Manuj, thanks a lot for being on the show. This is also the first time that we're speaking to you, so welcome to MF Corner. Like Sonal was pointing out, you've come out with a very interesting report that talks about when you should invest at an SIP. So just take us through the highlights of this report. What is the key takeaway that you would want an investor to know?
So first of all, thank you so much for inviting me, and good afternoon to all the listeners. See, basically, like you mentioned, we keep on getting this question that markets are slightly on the higher side right now. Let's wait for some time before starting an SIP. So what we did an analysis using the long period data of Sensex. So we took all those periods when Sensex has corrected more than 20%, let's say 20%, 30%, like during global financial crisis, it has corrected by 60%. Or let's say recently during COVID also, it has corrected some 38% from the peak. So over the last 27 years, there are about 9 instances where Sensex has corrected more than 20% from its peak. So we did this analysis that if somebody would have started, okay, let's accept this fact, it is impossible, by the way, it is impossible to consistently predict the exact top or bottom of the market. But just for the analysis, we did this analysis, let's say somebody started SIP at the top versus somebody started SIP at the bottom. So what is the difference in return and what is the difference in wealth creation? And the interesting findings are that even if you start at the top versus at the bottom over the long period of time, the return differential, the percentage return differential is minimal to begin with. But what is more interesting is that people who start SIP at the top without waiting for the bottom to come and starting SIP, they end up creating more wealth. So this is the interesting part of this analysis, that let's say, even if you are pretty sure that this is the top, and let's say 10 months down the line, you will find the bottom of the market. So if you wait for those 10 months before starting your SIP, actually you lose out on the compounding opportunity on these 10 installments. And in fact, the first installment, the installment that you make during the first year, make you the highest wealth over the next 10, 15 years because of compounding. So to sum up, I think this study basically, with the help of long period data, try to answer this hot topic. Actually, over the long period of time, first of all, it is impossible to precisely predict the market top and bottom. Even if you predict it, you actually end up making less money by starting your SIP at the bottom, by delaying your SIP for a few months.
Absolutely. If somebody could actually time that okay, I will not do it today, but after 10 months when I think markets will be at the bottom, that person would have achieved nirvana, right, when it comes to investing. But you know, you spoke about the study that you did. Can you prove the above synopsis that they would lose it on the compounding? It's better to actually start your SIPs at the top with an example that you can give us.
Yeah, so let's take this. Everybody is aware about global financial crisis because over the last 2 decades, that was the major correction we have seen in Indian equity market, when markets have corrected more than 60% from the peak. So let's take this example that if somebody starts a rupees 10,000 monthly SIP in January 2008, in the hindsight today, we know that that was the peak of that market cycle. So somebody is starting an SIP of rupees 10,000 per month in January 2008 versus somebody else starting SIP in March 2009, which again in the hindsight we know was the bottom of that market cycle. So the first guy who started in January 2008 at the top would have invested roughly about 18,90,000 rupees till now, till 30th September 2023. And the value of this 18,90,000 investment would have been closer to 58,50,000, okay, 58 lakh roughly. At the rate of 13.2% XIRR, the return is 13.2%. Now let's look at the second SIP, which was started at the bottom in March 2009. That guy, because that guy has started SIP 14 months later, okay, would have invested 17,50,000 rupees, which means 1,40,000 lesser than the first guy. And the total wealth, I mean, the total value of this SIP as on 30th September 2023 would have been 49,80,000 at 13.3% XIRR. So notice the return differential between these two SIP is minimal. The guy who started SIP at the top has made some 13.2% return. The guy who started at the bottom has made 13.3% return. But the important point is that while the investment amount gap between these two was 1,40,000 rupees, but the differential in current value is about 8,70,000 rupees. Because that 1,40,000 rupees would have compounded to 8,70,000 rupees today. So by delaying your SIP by 14 months and not deploying those 14 installment at 10,000 rupees per month, you actually lose out some 8,70,000 rupees and your returns are more or less similar.
I think that is very well explained, and it really sort of shows us, you know, how much just holding back on your investments can cost you. But I just want to spend a little bit more time on this because this is such an important topic. You've referred to this as the cost of delay, right? The longer the market takes to make a bottom, the higher is your cost of delay essentially. Just go through this with us again because, I mean, you don't know, the market might bottom in 10 months, in 20 months. You could be playing a very long game here.
Yeah, exactly. So why we mention this thing specifically, that the longer you wait, okay, the higher will be the cost of delay. Because let's say the market is supposed to make bottom in 3 months, like what happened in, let's say, during COVID time. Within 2 months, market reached to its bottom before it basically recovered back. So you would be postponing your investment decision by 2 months. So the 2 installments which you would have made if you would not be waiting for the market to bottom out, are losing the compounding benefit. But let's say I gave you this example of 2008, 2009. It took 14 months for market to reach to the bottom. So 14 installment, which is 1,40,000, is losing that opportunity of compounding. So the longer, if you are somebody who is waiting for the market to, you know, fall and reach to some bottom, which you can predict, okay? So like you rightly mentioned, sometimes it may take 14 months, sometimes it may take 20 months also. Like we have given this example of 2000 and 2001. So market peaked in Feb 2000 and it bottomed out in September 2001. So it took about 19-20 months for somebody who is waiting for market bottom. So those 20 installment, which is roughly about 19 installment, which is roughly about 1,90,000 rupees, would have lost the compounding opportunity, and that 1,90,000 would have become 42 lakh rupees as we speak right now.
Oh wow!
So the longer market takes to reach to bottom, if you are delaying your investment decision, also the longer is your investment horizon, the initial installment of SIP will end up making the highest compounding benefit, and you are losing out that benefit by delaying it.
Okay, interesting. So let me play the devil's advocate in this case. Okay, Manuj, in this case, do valuations not matter when you invest via SIPs? How do you look at that factor then?
So like we have given ample examples. So in this study, this is basically 27 years old data. So we are not taking, where we are not cherry picking some dates which suits our analysis. So this is 27-year-old data. And we are talking about 9 such cycles where market has corrected 20%, 30%, 40%, and even 60%. And all these periods, no matter when you would have started SIP, you end up making somewhat similar return. However, it is important to understand that the SIP period has to be long enough. If you are judging your SIP's performance over the next 1 year, okay, or let's say 2 years, then there can be some difference in terms of percentage return you make. But the moment you cross 5, 7, 10 years, which is suggestible that you only do SIP for long term, percentage tend to converge, whether you start at the top or at the bottom. So coming to the valuation part, I think when it comes to taking benefit of that accumulated money, it is very important that you take valuation also into the picture, not while starting the SIP. But let's say your goal is, okay, 20 years later, your financial goal, you're starting SIP for next 20 years, for some financial goal 20 years later. I think you don't know after 20 years what would happen, and suddenly markets, let's say after 20 years, something happens, the markets are down by 20, 30, 40%. I think you should be worried about that, and that's why it's suggestible that as you approach to your financial goal timeline, you start reducing your exposure from equity. So I think from valuation perspective, it is not important while starting the SIP, but when you want to reap the benefit of accumulated wealth, then it makes even more, then it is even more important that you take care of these things.
Yeah, and I'm glad that you mentioned that, SIPs are more effective when you look at it from a long-term kind of perspective, because that's when the magic of compounding can really, be on full display. But Manuj, we saw 16,000 crores of SIPs in September. This is a huge number. It was not too long ago when SIPs were at what, 8,000. So do you think there's a particular theme, sector, a market cap which is working in the current times?
So yeah, if you look at numbers, so let's say whatever SIPs we mutual fund houses are receiving, okay, at an industry level, at an aggregate level, within equity space. So, 1/3 of the SIPs, I was looking September number, roughly 1/3 of the SIP by amount are coming in small cap segment, and not surprisingly. And if you add mid cap also, about 45% of the SIPs, are coming in small and mid cap segment, another 15% in sectoral thematic funds. So about 60% of the SIPs are coming in categories or theme which are known to be volatile in nature. And maybe the reason can be recently, as you know, small and mid cap segment has outperformed large cap any other market capitalization strategy by huge margin. So over the last 3 years, particularly small cap has done reasonably well as compared to large cap, and that is also reflecting in flows data that today bulk of the flows, not only SIPs but lump sum also, are coming in small and mid cap category. And we have seen this thing happening again and again, that whenever a particular theme or a segment of the market does really well, a lot of flows, that segment attracts a lot of fresh investors and a lot of flows.
Okay, all right. So small, mid cap and sectoral themes really working there. We'll do one thing, Manuj. We will continue this conversation, but we'll do that after a quick break. And on the other side, we'll ask you more about SIP investing and a lot more. Stay tuned.
Welcome back. You're still tuned into MF Corner here on CNBC's TV18, and we still have Manuj Jain, and we're talking all about investing in SIPs and how you can really go about it. Manuj, you've also spoken about why do winners rotate. Now, this is something that happens in the market in all aspects, right? In terms of investment styles, sectors, themes. But tell us, why do winners rotate? Yes, Manuj, I think we have you on mute.
Yeah. Thank you so much. So yeah, just to give you some background, and I mean the viewer the background, like in 2018, 19, 20, value style of investing has been underperforming for consecutively 3 years. So various fund manager you look at in our industry, they have some preferences. Like somebody will say that I'm a value investor, somebody will say I'm a contrarian, which is again a subset, or contra investing is a subset of value. Somebody will say I'm a expert of micro cap investing. Okay, somebody said that I have a preference to export oriented businesses, cyclical companies, etc., etc. So all these are factors. Okay, these are narrow strategies. So if you look at broader market, okay, let's talk about BSE 500, because BSE 500 roughly take care of about 93-94% of the listed space in India in terms of market capitalization. So whenever you bet on particular theme or a narrow strategy, it can be a sector, it can be a particular style, value style of investing, growth style of investing. We have seen that all these styles or factors are influenced by macros. Because of some macro headwind and tailwind, certain sector can perform very well or it can underperform for many years. And we have also seen when a certain theme or sector perform very well, it attracts a lot of flows, like what we have just discussed about certain categories. So when a particular theme or a narrow strategy or a factor perform very well because of some macro headwind, okay, or tailwind, because of some macro tailwind, it attracts a lot of flows. And because of those flows, it becomes slightly overvalued. And then you need some trigger. Now that trigger, we will only know in the hindsight, but that trigger can be again a macro trigger. So a macro tailwind can become macro headwind, and that will result in some correction, and then flows dry up. Net inflow become net outflow. And that's why we have seen over the time, a particular strategy or narrow strategy doing very well, attracting a lot of flows. Then some macro event happens, which we can't, predict in advance. It will only be known in hindsight, and that result into that particular theme underperforming, seeing a lot of net outflow, which further, exaggerate the underperformance.
Okay, we take that point. So there is rotation that, of course, different views make the market, right? So in that case, Manuj, how can an MF investor strategize? Because there's rotation all the time. How can they work on their portfolio allocation in different segments which work at a particular time?
I think it is important that we understand this point that these narrow strategies cannot be core part of our portfolio. Okay, even if you want to bet on particular style or particular factor, it can be market cap factor, it can be value versus growth, it can be domestic cyclical versus, let's say, some export oriented strategies. Okay, whenever you're betting on very narrow theme, let's say today PSU is a buzzword. Now, in BSE 500, PSU's weight is about 9%, approximately. It is last month's data, approximately 9%. So whenever you are betting on one particular theme, you need to be aware that this strategy can outperform meaningfully, underperform meaningfully. And it is almost impossible to correctly predict that how macros will turn out to be. Like, it is almost impossible to predict geopolitical events. Nobody was talking about Russia-Ukraine war, and recently, let's say this is what is happening in a different part of the world. So, but these factors will have impact on particular theme. So I would like to suggest that, first of all, even if you want to bet on certain factor, then it cannot be large part of your portfolio. Secondly, you should be aware that there will be cycles of underperformance, cycles of overperformance, outperformance. Like I give this example of value versus growth. So in 18, 19, 20, value was at the bottom. But in 21, 22, 23, value investing and PSU investing, to be specific, is at the top. Who knows what will happen in next 3 years? So even if you want to bet on certain sectors, I think it is better to take a contra view and to take very small exposure and to be aware that there can be years of underperformance or outperformance.
Okay, and that can actually be the whole benefit of SIPs, right? That when you don't know what could happen or what could hit the markets, you've basically averaged out over a longer period of time. Manuj, I'm just going to try to squeeze in one final question. What is the balanced portfolio construction approach that you guys are following right now at WhiteOak?
Okay. So see, now taking it ahead from the previous question you have asked, that why not bet on certain factor or how to benefit out of it. So basically, we believe that sometimes it will go in your favor because of the macro event, sometimes it will not go in your favor. So instead of focusing too much on which factor will work for the next 1 year, at WhiteOak, what we do, instead of starting with a very narrow universe, so like I give you example, in BSE 500, about 50% of the businesses can be categorized as value and about 50% can be categorized as growth. So if I say that I will only invest in value, so first of all, I have narrowed down my investing universe to 50% of, okay? So instead of doing that, we start with the entire universe. So there are about 1,000 companies listed in India which has a market cap of more than 1,000 crore rupees. So this is our investable universe broadly. So we start with the entire universe. We do not differentiate between value, growth, cyclical, export, domestic, etc., etc. Then we put our filters that based on corporate governance, we exclude some of the companies based on if the businesses are not scalable, they are not generating enough incremental margins on cost of capital, above cost of capital, we exclude all those businesses. So we left with, let's say, somewhat 250, 300 businesses which we believe are good businesses and scalable, provide scalable long-term opportunities. Within that, then we filter out some of the businesses which are good businesses but may not be available at a reasonable valuation.
Okay, all right, Manuj, you'd have love to take it forward, but we'll have to take a quick break. When we come back, we'll focus on some of the market action as well. Thank you so much for joining us, and stay tuned for Closing Bell to take you through the last hour of trade.